Lesson 6-3 deals with extending financial statement information on a worksheet. We're going to complete the worksheet. At the end of the fiscal period, Delgado Web Services prepares 2 financial statements from the information on a worksheet. Up-to-date account balances are extended to columns for the 2 financial statements. A financial statement that reports the value of our business's assets, liabilities, and owner's equity on a specific date is called a balance sheet. So again, our balance sheet is going to contain assets, liabilities, and owner's equity accounts. The same accounts we started with when we had our accounting equation. Extending balance sheet account balances on a worksheet. The first step is you are going to extend the balances without adjustments. You can see it has a trial balance debit. I'm going to move it over to the balance sheet. The balance sheet, remember, contains assets, liabilities, and owner's equity. So the top 3 do not have adjustments. I should say the top 4. Then we have debit balances with adjustments. Okay, so what balance we're going to use here? We have a $620 supply debit. We have a $530 supply credit. So therefore we have to subtract. Our new balance is $90 and it is a debit. The same thing with prepaid insurance. We start with a debit of $900, a credit of $150, so we have to subtract, and our new balance for supply or for prepaid insurance is a debit of $750. So we'll extend the debit balance with adjustments. Then we are going to extend the credit balances without adjustments. And we will extend our drawing account. A financial statement showing the revenue and expenses for a fiscal period is called an income statement. So our income statement will contain our revenue and expenses, revenue and all the expenses. We don't have to worry about income summary right now. We have not even covered that yet. So our first step is to transfer our sales. We have a credit there. It'll transfer as a credit into our income statement. Expense balances without adjustments, we will transfer those exactly the way they are. And then we're going to take a look at the expense balances with adjustments. If you look at insurance expense, started with 0. We had a $150 debit, so therefore 0 plus $150 debit is a $150 debit. Same with our supplies expense. We start with a 0. We have a debit of $530, so our new balance is $530. The difference between the total revenue and the total expenses when total revenue is greater is called the net income. We're going to draw, after we are done transferring all these, we will draw a single line across there. We will write our totals, and you will see these totals will not balance out yet. So we write the totals of all 4 columns. We're going to figure out our net income and extend that balance. So we're going to figure out the difference between our revenue and our expenses will be our net income. And then we will single rule. We will add up the totals and we will double rule. And you will see that these 2 balances equal out and these 2 out. The difference between the total revenue and the total expenses, when the total expenses are greater, when you have more expenses than revenue, that is called a net loss. Okay, so here would be your revenue. Here would be your expenses. 2,400 is greater than 2,100, therefore you have a net loss. When you put the amount in your credit column, you have to put it in the debit column over here. So we'll single rule, put our totals in, write our net loss, and our extent. There sometimes we have errors. Several different kinds of errors may be made when preparing a worksheet. 3 examples of errors. There might be errors in the accounting records when you're actually transferring from your ledger. There may be errors in your calculations. We've all done that. And an amount may be entered in the wrong column. You may have put it as a debit instead of credit and vice versa.